Zucking the life out of Facebook shares. Here to join me to talk about it is Rob Cyr, and he is a Reuters Breaking Views columnist. Hello, Rob.
How you doing?
I'm great. I'm better than the Facebook shares right now, I suppose.
Well,
it's one way to look
they're
at
just
it.
Sucking wind, aren't they?
Sucking wind, yes, sucking wind. The lockup over the expiration on the lockup today.
This is actually just one of many lockups coming, and
right.
It's actually a small one. The big one is going to be in, I think it's September, when about 5 times as many shares are going to be unlocked and people can sell them.
Right, but Facebook down 6% today at a new low.
Yeah, it's almost half.
It's almost half of the IPO at $38, which is pretty amazing. So where do we go from here? As you mentioned, because November
probably keep on going down. Because,
over a billion shares will be out there?
Yeah. And what happened was there was a story earlier this week that Peter Thiel, he's one of the biggest backers of the company, he converted his shares from A to B. Sounds like a minor detail, but it's important because what that means is it allows him to sell the stock. And if he sells the stock, that's a big chunk of shares coming onto the market.
Okay. We can't talk about Facebook without looking at the Zuckulator. This might be your initial Zuckulator moment here.
Okay.
He's down. There's a big 0 next to that 10. We haven't seen that in quite a while.
And 10 is still a very big number.
10 is still a very big number. Okay, you're going to stay put. Don't go anywhere. I'm going to head over here and talk to Jérôme Martís, the Always Fashionable, to talk a little fashion and retail. We always have you here by the 3 monitors. This is like your boutique.
Yes.
I have to dress it up a little bit more for you when you come back next time.
Sounds good.
Anyway, all right, let's talk with about the world's largest retailer first. Walmart, down 3% today.
They're seeing a lot of weakness globally, and as a result, they're slowing down on their international expansion and focusing more on improving sales here in the United States, which is very smart for 2 reasons. 1, U.S. is their biggest division, and 2, also this was the first time the U.S. slowed down after 5 consecutive quarters of improvement. Wow. Walmart already said they're seeing signs that the consumer is conscious. They're not spending as much. They're spending more in the beginning of the month when they cash in their paychecks, and then they see a trend of slowing sales as the month progresses.
And they also have that kind of pesky probe in Mexico hanging over them about this potential bribery of Mexican officials, right?
Yes, they've already spent about $34 million, and they're expected to spend even more, $35 and $40 million in the next 2 quarters.
Okay. Let's move on to Sears, up 5.5% today despite sluggish sales there.
Yes, even the Kardashians couldn't save Sears. They saw weakness in their electronics, lawn and garden divisions. And this is troublesome because it shows that the consumer is not spending on those big ticket items.
Right.
Still, they do know that they have to revamp their customer experience in order to lure those consumers in. So they are also focusing more on accepting smartphones in order as a form of payment.
Right, mobile payments now.
Yes,
right.
Something that also Walmart and Target are aligned to do. And they're also spinning off some of their business.
Right, spinning off and selling off some of their assets, right, and focusing more on
which will generate about $446 million with Hometown in their outlet stores.
Okay. Let's talk about the Perry Ellis brand, a brand that I have to admit I haven't thought of since the 80s and big shoulder pads, but has changed hands several times since then, not the big company. They're a major, big global brand. Laundry by Shirley Segal.
My favorite.
Yeah, I was going to say, a brand
with
with your sister, a brand that I do wear, Axis, Cubavera, but they're down 17% today.
Yes, sales are weak and expenses are increasing. So analysts are very cautious about the pricing strategy for this company, where their price points are going to be. They can't continue to discount as heavily as they have in the second half of the year if they want to continue to be profitable.
Okay, Jérôme Martís, thank you so much,
you.
as always. And I'm going to head back to Rob Cyr in here, and as I try not to trip on my wires here, let's talk Apple. This is an interesting story coming out of the Wall Street Journal, the fact that they are in talks, it seems, with cable operators to supply their Apple-branded Apple TV box instead of having in your home the cable operator's box.
And that's actually not a new story. We've known about this for a while. I mean, it's details, of course. Since the biography of Steve Jobs came out, we've known that they've been working on TV, and we knew that actually before then. Right. And the question is, how does it actually work? And it makes sense if you think about it. You know, if you try to program your VCR, your TV, it's just an awful, awful experience, let alone if you're, 75 years old.
Do you think this is a case of sort of if you can't beat them, join them, in a sense, that Apple hasn't grown as much as they thought that they would, and it's expensive for them to sort of license content because they don't have, what they're going for is the live, they have kind of back-recorded stuff and live streaming internet.
Yeah, we don't really know how it's going to work. I mean, it's obviously they're interested in this as a thorny problem, but then they did the same thing in music, if you think about it. It was something that everyone said, you can't possibly do it, and they actually did it.
Right.
The question is, of course, how the negotiations work out? We have no idea how it's going to work out, and I don't think they do either. We just have to see what happens.
So what's the upside for the cable operators? Because you might think knee-jerk-wise, don't let Apple anywhere near your product. Don't let them get a foothold in the TV business.
They may not. They may still not allow it, but it seems like they're bowing to reality. And the reality is that cable companies, the TV business is not a great business anymore, and it's becoming worse and worse because everyone's starting to watch things through Netflix, through Hulu, et cetera. And so, but what's great for them is they sell internet access, and if the more internet access they sell, the faster they sell it. They can make a lot of money doing that.
So they can capture some of that audience, and they won't have to, I guess, pay if this comes to this, and they won't have to pay for those boxes. And then
it's a nice glamour business. Everyone wants to be on the set in Hollywood and stuff, but the money's actually not that great.
Okay, let's move to the hot spot. This is a very hot spot.
It's very hot. Don't touch.
You can feel it. You can feel the heat generating off of it. Okay, let's talk Cisco. Because they're up 8% today. Dividend hike sort of overshadowing sluggish sales there?
Yeah, a couple things. First off, sales weren't great, but that doesn't really matter because everyone knows that not everyone, but a lot of people know that wireless.
In your role, everyone knows.
Among nerds, yeah. Computer networking gear, it's kind of a mature business. It's not a great business anymore. It's a stable business. The problem is that Cisco, they spent over a decade just blowing billions of dollars on acquisitions, and investors really got annoyed. And about a year ago, Cisco's boss, John Chambers, had to say, okay, look, I know you're all very angry, and what I'm going to do is I'm going to stop buying as many of these companies, and what I'm going to do is try to actually make the companies we have work better, and we're going to give more money back to shareholders, and that's what you saw today or yesterday.
Okay, I want to jump in here and go back to Facebook for a second because the shares are now actually trading at double the normal volume. Just make note of that for folks out there. All right, we're going to move now on to stay a little techie here. We're going to move on to Electronic Arts, video games. They make Sims, they make Battlefield, John Madden's NFL. I'm sure you play that a lot, right? You're a big fan?
No,
not so much. All right, they're up 8.5% today. Takeover?
Well,
KKR?
there was a story in the New York Post, that paragon of financial news reporting.
Oh, come now.
They're actually pretty good.
Now.
But anyway, it was more of a silly August story. They were saying, look, it's going to be a target of a takeover. But if you think of it, would you want to buy Electronic Arts? I mean, I wouldn't.
Personally?
Yeah.
I've never used one of those consoles ever.
Well, the problem is that people are switching to social games.
They're not online. They're free.
Yeah, they're not playing as many games on Nintendo, Xbox, etc.
Right.
The problem is if you put a lot of debt on this company, the question is, can they pay it off? And so it's one of those stories. Could private equity take it over? Sure. Will they? Probably not.
Okay, because Vivendi also tried to shop Activision Blizzard similarly
and that's not going
earlier.
so well, yeah.
Not going so well. Okay, we're going to head back then to the big monitor and look at U.S. stocks because they've hit session highs after the news that just came out from Angela Merkel.
Who's just back from vacation after a couple weeks of vacation.
She's tanned, she's rested, because she's now saying that the European leaders, such as herself, are in line with what Mario Draghi said about doing whatever it takes.
Yeah, that's a big story because the German economy, everyone knows that the German economy is very dependent on exports to the south. And the German population, they're not so happy about the idea of bailing out people on the periphery, Italy, Spain, et cetera.
Right.
And this is kind of bowing to reality and saying, well, we have to actually do something. Between now and the time when actually there's more integration, such as big fiscal support of the South, guaranteeing their bonds, that could take a while. It may still not work, but this is a big sign.
A big step. She's tanned and rested and back from vacation.
She's tagged and rested, and she's
ready
to take on the implosion of the economic world.
Exactly. Okay, Rob Cyran, thanks so much for being with us.
You're welcome.
And thanks to Jerome as well. And remember, you can follow us on Twitter at Reuters Insider and check out our Reuters YouTube channel. That is Reuters.com/ReutersTV. I'm Lisa Bernhard. This is Reuters.